Hello there, hope you're all doing well. In this one we're actually going to be breaking down a full step-by-step market maker model strategy. I get a lot of questions asking, what is my protocol, what is my strategy, what exactly do I trade? And that's what I'm going to be essentially breaking down in this video. So without wasting anyone's time, we're just going to get straight into it. I have put up this schematic of a market maker buy model. Maybe you've seen on my executions on Twitter when I put NQ market maker buy model, I'm always referring to this entire curve, this entire process where price goes from one side to then complete the other side. And we're just going to quickly go ahead and walk through this before going to some actual examples. So as you can see, the curve always starts up here. Now in this area, we have what we call the original consolidation. Now a big misconception is the fact that this has to be a consolidation for it to be the actual start of the move. But sometimes you can simply have a high or a low, which can also be considered your original consolidation. The point is not the fact that it's going to be a consolidation, accumulation, back and forth. It's the fact that it's going to be the start of the move. And this is where price is going to try and reach for once the other side of the curve has been set in motion. So when we identify our original consolidation, we then wait for price to complete the left side of the curve. So in this case, it's the sell side of the curve. And how do we actually know that the left side has been completed? Well, there are stages. You can see price goes from consolidation and then finally it reaches our higher time frame point of interest. Now, if you're unsure about your point of interest on the higher time frame, I recommend you watch my finding the right higher time frame PD arrays video. In that one, you're going to be able to quickly understand what I mean by higher time frame point of interest, and you just simply apply that logic to this video. Once we then see price go from consolidation distributing lower into our point of interest, taking out a time cycle liquidity, which is either going to be a previous daily low, previous daily high. This is something I walked through inside my SMT video, where I talked about the different type of time cycles we have, where we have sessions, we have days, we have minutes, all the different time cycles that we use. We basically want to see a sweep right here inside of our point of interest. Price is then going to form the SMR, and this is a perfect example with a breaker setup, where we have a low, a high, lower low, higher high, which gets displaced, and we have a busy inside of here, an imbalance that forms as price displaces above. Inside of this breaker high, this is your market structure shift pattern, and you can see that price will retrace into it to then go higher. First stage, accumulation, second stage, and then finally goes higher. So you can see price will accumulate on the way up in different stages, and then boom, finally it does reach the original consolidation. So the beauty of this is that you can literally frame an entire trading idea just based on the original consolidation. So just by looking at this and us already starting to form a nice left side of the curve, we already know that this is going to be our target for this entire market maker model. So looking at a bearish example here, which is exactly the same thing, just the other way around. And when you start viewing the markets this way, it's going to simplify your approach in such a way that you're basically never going to look at the markets the same, ever. Because this is so simple, I'm telling you, it's happening on every single time frame, on every market, every pair, and it's all happening inside of fractals. And what I mean by that is that a move is always happening inside of another move. So let's say that this was a higher time frame market maker sell model. Well, inside of this stage, this in itself can be another market maker model, just based on this. You can trade these fractal market maker models on the lower time frames, which is basically what I do. I have the hourly and my higher time frame market maker model outlined. Then I can go on the lower time frames and I can find this exact same model playing out just on the lower time frame. So I'm using that to align myself with what the higher time frame is doing, and then framing my ideas based on the lower time frame confirmations I get once we have reached our point of interest. Because then I already know that if I have my point of interest here, my first draw on liquidity is always going to be original consolidation low. So depending on the market maker model that you're actually trading, it's always going to be original consolidation as your first target. So for the sell model, exactly the same thing, where we have our consolidation, price moves higher, retraces higher, retraces, and then finally reaches our higher time frame point of interest. So once we reach our POI, we've swept some sort of time-based liquidity on the higher time frame. We form our SMR by getting SMT, which can also be at a failure swing where price does not take the high, but the other pair does. And then you have the mitigation block set up, and you can see that here. Price displaces it, retraces, and when you have a SIBI or an imbalance aligned with that mitigation block, price retraces. That's a very strong entry confluence. So inside of this SMR, smart money is going short. And every single time price displaces lower, there's another opportunity, short right here. And if you miss out on this stage, you simply wait, price displaces, retraces, there's another shorting opportunity right here. This is what I want you guys to see. Every single move is a fractal market maker model. Just imagine this entire curve right here, this entire model that I've laid out. It's also happening inside of here, and here, and here, and here, right? So what you can do, if you missed out on the SMR, you simply wait for your exact same confluences to form inside of here on a fractal lower time frame. This way you can take part in the larger market maker model by trading a lower time frame one. Because you know that as long as price has not reached the original consolidation, every single retracement is another opportunity for me to get in. And this is the way you have to start thinking. You have to start thinking in terms of, okay, has my higher time frame target been reached? Has price basically completed this sell program, right? And only when price has completed the sell program right here is when you have to start monitoring, okay, now perhaps we can turn around, the market can continue lower, of course, or you can then get another opportunity to take a buy from this area. You simply wait for the same thing to form, a fractal market maker model. It's always the same thing. And it's happening inside of every single stage. So every single stage of reaccumulation or distribution, it's always doing the same thing. You just have to fractalize it. So now that we know what the market maker model is, and we've seen two examples, what is the actual model that we're going to be using to trade this idea, to trade this strategy, right? So step number one, identify the higher time frame original consolidation. This is, just like I said, we identify the point where price is likely going to return to at a later time. Step number two, identify your higher time frame point of interest, where we have a higher time frame PD array. I highly suggest you go and watch the finding the right higher time frame PD arrays video I made, as it will be very helpful to make sure you understand what point of interest is actually going to be valid. Step number three, you wait for a time-based liquidity sweep at your point of interest. So this is, again, time cycles. We're sweeping a time cycle liquidity. You then wait for price to provide an SMT, which I've also talked about in a previous video. If you don't know what I mean by that, I highly suggest you go watch it. Then step number five, we wait for CSD. Now CSD, that will be our change in the state of delivery. This is basically the moment where price shifts from a sell to a buy or a buy to a sell model. And we can see that it's being confirmed through our CSD. And then finally, for your actual entry, we simply wait for a retracement after the CSD has occurred, preferably then inside our macro times, which are from 45 to 15, which are the minute markers. So you have, for example, 9:45 to 10:15, which is probably the highest probability macro that we have inside of our New York session, especially for those who are trading futures. All right, so let's go ahead and take a look at a live example of a buy model that we had on Friday. So first step, identify the higher time frame original consolidation. Now, as you can see, to me, the original consolidation high would be right here, just above the weekly open. Now, why is this the original consolidation? Now, to represent this, I've gone ahead and drawn out a box right here, as you can see. Now, this box simply indicates the exact same thing that I showed in the schematic, where you have the original consolidation, left side of the curve, smart money reversal, right side of the curve. It's the exact same thing that I showed you earlier, just on the higher time frame. So you see that you have less candles to look at, but in a second when we go down to the lower time frame, you're going to be able to see it very clearly. So we have identified our original consolidation. So we go ahead and mark that out right there. As you can see, that's our buy side. And next, we go ahead and identify our higher time frame point of interest. So to find our higher time frame point of interest, we have to apply the logic that I talked about in my earlier video on the PD arrays. And we're going to zoom out. So we go ahead and zoom out. And right away, what do we see over here? You can see right here, we have this imbalance on the left side. Now, why specifically this imbalance? Well, as you can see, price has clearly been referencing this imbalance a lot. So what do we know? We know that price has shown an interest to this area, and we should keep on paying attention to what price wants to do here. Every time it gets displaced, we now expect that whenever price retraces into it, it should find some support to then use it to go higher, because it's a reclaimed inversion. It's also very important because this is the first imbalance that formed on a move higher that took out liquidity. That's also something else I highly suggest you start paying attention to. So having our point of interest, now we simply wait for the third step, which is a time-based liquidity sweep. So on the lower time frames right here, we are now at market open. You can see market opened higher, took out liquidity, formed a 30-minute SMT. And like I said, we're still at the third step because, as you can see, our buy side is still up here that we marked out before. It was not reached by 9:30, so we know that the higher time frame idea should still be in play. As you can see right here, we have the AM cycle starts at 7 o'clock, price comes down, sweeps it, this 7:03 right here. And what time does it sweep it at? 9:45, exactly inside of our macro. So knowing that we have the third step as well, we wait for SMT. Now in this case, as you can see, there was no SMT with ES at this low. If there is no SMT with ES, then we have to check with the other correlated market, YM. So as you can see right here, we have YM on the right, NQ on the left. And you can see YM takes the London distribution cycle, but NQ does not. So we have an SMT. So now we've completed 4 of the steps. Everything is looking good. And now the next step is to wait for CSD. So looking at what price has done, you can see we start displacing right after this low formed. It's a perfect rejection wick right here at our point of interest. We then see price close right here at 9:47. Price then closes above this high, which on a lower time frame is actually a breaker. So you have the high of a breaker right here. Price closes above it. You then simply wait for price to retrace into this area, which would be your market structure shift pattern on a lower time frame. You can simply then enter as the time is 9:48. You're inside of your macro. You have everything that you need to see, and you already know that price is going to go towards the target. This is what it would look like. You enter on this retracement into this breaker, and you can have your stop below the 9:47 candle. So you don't really anticipate the low of this breaker to be taken again. If price is bullish, it should just keep going. And that's why you can have your stop around this area or around this area. Now remember what I said about price being fractal. And you can probably tell already, just by looking at this, that you can see the market maker models. You can see we have our original consolidation, left side of the curve, smart money reversal, right side of the curve. Price is going to do the same thing, where on the lower time frame, on the 15-second chart, we have a original consolidation in here. We have a left side, smart money reversal down here, and we have a right side. And even up here, original consolidation, left side, smart money reversal, right side. A 1-minute market maker model. So in this case, We have our higher time frame target, which is up here, the one we marked out before. And you can also target this high, which is your fractal original consolidation, just like I talked about. So when you're trading a 1 minute market maker model like this, you want to make sure you take partials around this area. And as you can see, shortly after, price retraces one more time, then goes higher, takes out the buy side. And you see how we have these stages every single time. It's another opportunity to get in. Are you now starting to see what I meant when I said that everything is fractal? There are fractal market maker models in play, and you just have to align yourself with the lower time frame one to take part in the larger one. And I hope this has become a lot more clear to you in this video, and you start to understand that you can frame so many trading opportunities just based on this logic and the protocol that I've provided to you in this strategy. It's so simple, and I truly hope that you will investigate this and actually start looking how many times you see this exact model play out. So I wish you good luck with your studies, and with that being said, have a good one, and I'll see you in the next one.